Good morning, it's Friday the 4th of November. I'm Tom Colley bringing you the Phoenix Blue Morning Update. This is a second recording. If you've listened to the first one, the sound went halfway through for some reason. Okay, so the markets yesterday, we had a lot of news out from the pound. Saw some strong price action in the bullish way for the pound. Today we have non-farm payroll, which means we've got to trade cautiously. We're already cautious because of the uncertainty, or increasing uncertainty even, over the US election. Let's have a look at the news first as usual. Yesterday, before we got into the main event as such for the pound, we had the services PMI that came in very positive with an actual of 54.5 as above the forecast of 52.5. We then had the somewhat shock announcement of the EU membership court ruling. This said that the government needed to go to Parliament before it could sign Article 50 in order to start the Brexit campaign. Politically, very controversial, but from a trading perspective, the markets perceived this as being potentially the portent to a more or a softer Brexit, because a greater involvement of Parliament, which has a more of a Remainist stance, could see that the attitude of negotiations being more conciliatory. Okay, we then had the Bank of England monetary policy statement, rates held at 0.25% as expected. Votes 100% in favour, that's 9 votes with no abstentions and nobody voting against. Mark Carney then spoke. The main summary of that was that they were prepared to move in either direction as regards rates, so a rate increase was just as likely as a rate decrease going forward, data dependent, and obviously exactly what happens in respect of the EU membership ruling, etc., etc. The net result of the ruling is that the government are going to go to the Supreme Court. That is due to happen around the first week or so of December, and they're hoping that that won't delay the Brexit scenario. Almost certainly won't stop Brexit, because Parliament isn't perceived to be willing to vote against the will of the people, but we will see potential delays and, as I said before, possible softening of the Brexit. Overnight we had the RBA monetary policy, quite bullish from the Australians. They see less risk from China, their major export partner. They see a windfall in the short term, certainly on material and commodity prices. We've seen, and I've mentioned already this week, rising coal and particularly iron ore prices, which are the big exports from Australia to China. Today, it's all about non-farm payroll. We've got the usual suspects there: the employment change itself, the average hourly earnings, and the unemployment rate. We have a forecast of 174,000 against 156 from last month. If you remember, last month we were suggesting that the markets would be content with anything above 150,000 because it perceived that the Fed would be similarly content with that figure. We had the Fed statement this week. It pointed towards the anticipated rate rise in December. The expectation from the markets is around 80%, I read, of that rate rise, and as I say, I don't see that changing unless we see some substantial failure below 150 on the employment there. So over to the charts, and basically uncertainty everywhere. We're waiting for non-farm today, and Tuesday, Wednesday we have the US presidential elections. We're sat on key levels across most of the majors and minors. This is the dollar index. We're sitting on 97.20. We highlighted this level. We have been highlighting it for several weeks. Prices sat there. As long as we get anything other than really poor non-farm payroll figures, I see that still sitting on that level or potentially pushing a bit to the long side, depending on how strong those numbers are. But the election is overriding everything at the moment. The uncertainty there is increasing. The polls are suggesting that it's a tighter fight than ever and getting tighter by the day. Over on the euro, we're sat at this level here. Again, it's a level around where we've been identifying for several weeks. We've been talking about correlation between the majors and the dollar index. That's exactly what we've got here. We've got the same on the US dollar JPY, the yen trade. This is another level, or circa this level, we've been waiting for a long, long time. Prices sat there for exactly the same reason. Here at Phoenix Blue, we'll not actually be taking this trade because A, it's non-farm payroll today, and the uncertainty of the election. Number one rule is capital preservation. That would normally be a high probability entry, but the fundamentals completely change the picture there, and we can't guarantee, or we can't be sure of any high probability there simply because the fundamentals are not measurable. Over on the pound, well, this is the bullish move we saw through yesterday based on those services PMI figures, based on the Bank of England statement holding the rates, and the court ruling about the leaving of the EU. All those were bullish, and we had a move up to a key level of or a big number of a 1.25. That's clearly key now. We've got a trend line to the downside here. Price is still sitting above that trend line. We'll be looking for a break above 125 over the next week in terms of pound strength there. Whether we see it or not, I don't know. If we do, one trade that, and we see dollar strength as well, one trader we'll be interested in is the euro pound. I see potentially that the euro is overvalued versus the pound, so we'll bring you up to speed if that scenario happens next week. We're only in commodities trade at the moment. The one trade we're in is crude oil. The other one is a long-term trade in cocoa. We are short this market. We've had entries at 50, add in at 49. We've had profit off the table 3 times. We've got the remaining profit locked in, and we're looking for a break below this level of $44.50 in order for a retest to take that further to the downside. Interesting picture here. We had the crude oil inventories on Wednesday coming in well ahead of expectation, suggesting that there is still oversupply. Price was pushed to the high side by OPEC, suggesting they were going to come to an agreement between themselves and the majority of significant non-OPEC members. That appears to have fallen flat, and potentially a cynic would say there never really was any possibility there. It would be interesting to see next time they suggest something what the market does, because surely at some point the market must, if it doesn't succeed in an agreement, the market must come to the conclusion that the agreement isn't going to happen. But to be fair to OPEC, they've had a price up here for a number of weeks when, a considerably higher level, let's say $5 higher, just on effectively little more than suggestions and rumours. So again, a market to keep an eye on. Like everything else, we're not looking to trade it in the short term. We're not really looking for anything until after that election plays out. That election's caused a bullish run in gold and other safe havens. We've seen a strong Swissy, a strengthening yen. We've seen silver with a bullish move exactly like this. This is perceived as the cover for risk of Donald Trump potentially winning the US election. That is seen as being a bigger risk fact than Hillary Clinton winning, hence the move bullish there. We were in this trade around this level last week. We got money off, stop at break even, but then unfortunately we got stopped again and had another opportunity to get in. Such is the life of a trader. We're seeing the reverse of that on the S&P and other equities, worldwide equities, be it the Americans, the UK, the DAX, and even over in the Far East on the Nikkei, Hang Seng, etc. We're at a level here, if we see a Donald Trump win or the potential increasing of that, I see further downside in this market, potentially. If Trump does win, then the question is, where does the downside stop, I think. But we always will trade the technicals, we'll look at the fundamentals, we'll take a view, but we'll only actually take the trade if it fundamentally stacks up, which basically means we'll need a break below this level and some form of pullback in order for an opportunity for us to take a trade to the short side at resistance. Okay, guys, that's it for today. As I say, it's really a time for caution to save your resources for another day when the probability that we look at and work for and back tested has a better opportunity of playing out. If you like what we see, you see like a charts where we don't use lagging indicators, etc., come along to 4 hours free trading with our fund managers on the November the 15th in London. Absolutely free event, chance to A, trade live with experienced fund managers, B, to glean a lot more information about how we trade, how we set up our trades, how we analyse both fundamentally, technically, and with commitment of traders and seasonal analysis, and also an opportunity to meet existing Phoenix Blue members who have been existing traders who managed to adapt our systems and our analysis and move their trading onto a much higher level in terms of a greater degree of profitability and better risk rewards, etc., etc. So a lot of opportunity there, absolutely without commitment. Please come along if you want to. Pop on the website, the events page, click through, leave us your details, and we'll send you an invite and joining instructions. If you have anything else you want to talk about, if you just want to chat about the markets, a specific trade, potential trade, anything that we've talked about in these videos recently, or you just want to critique the videos, please just drop us a line at info@Phoenix Blue. Okay, guys, that's it for today. That's the second run through. Hopefully, the volume will be constant throughout this. Be cautious, have a great weekend, and let's look forward to the US election playing out next week and hopefully giving us some great direction so we can make some pips. Thank you. Goodbye.